All right, so again, the question from Jay in the trade room: how do you measure, identify a gap fill in indice? Rules and guides to doing so. Okay, so right now let's just make a 5-minute chart, and there's 100 ways to do this. Let's choose. Let's just go to magnet. We'll do Spike Striker. Let's do Spike Striker. Okay, so let's put it on Spike Striker, but I'm going to delete some of the stuff off here. So we go to Spike Striker. It's 5-minute bars. Okay? That'll give us a lot of indicators on there that we're going to want. Alright, I'm going to get rid of 10 and 15. Now, let's see, I did this in the past. I'm trying to remember how I did it. There's a lot of ways to do this. Let's go in and let's do indicators. We'll just use the color time region. Okay, so add color time region on. Then down here, let's make from midnight to 9:30. Let's make that light gray. We'll make from 4:15 to midnight light gray. We'll make the middle one just transparent. Okay, and then we'll hit OK. What that's going to do for me is basically going to gray out the overnight session. Okay, so the market closed at 4:15, and it opened back up at 9:30. So that right there just lets me see the overnight movement. And then so go over here, and then I can basically just measure. Let's we'll zoom. There we go. And then what I'll do is I'll use the ruler and I'll just measure. Okay, so we closed here. We opened here. So the market gapped up 9 points. Okay, so between the pit hours. The reason this works on indices a majority of the time is because of the fact that the best way to put it, the what's the best way? Because all the stocks are trading. There's 500 stocks. They haven't traded overnight like the future has. Okay, so there's a ton of limit orders sitting there waiting to get filled. Okay, so the market closed over here. It settled at this price. This big blue line is the settlement price of yesterday. If I scroll over, you'll actually see the word settlement, like right there. Maybe a little hard to see, but the thick blue line is settlement. So the indices settled out here, and the indices kept trading because of news and other things like that. Well, these stocks, the 500 stocks in the S&P 500, have not been trading all night. This is the reason it doesn't necessarily work on gold and oil and currencies, because they've been moving all night, and there's not like they're a basket of something else that hasn't been moving. Okay, you can do it on like currencies and gold and stuff like that, like on the weekend. So like, what did it gap from Friday to Sunday? Okay, that is a way to do it. But I focus mainly myself on the indices. So it gapped up, 8 points. And so the theory is that the majority of the time, and it's an accurate one, the market will retrace back down and fill the gap. And notice when it fills the gap, what'll happen? Pop! Bounces right off of it. So we can go through and you can look at them and go, okay, let's find other gaps. And you can just start scrolling through. And so we got one here. This one has not filled the gap. Over here, this one has filled the gap. What's a couple of clues? One clue is I don't get into them when they've already moved a deviation. If there's a deviation move, I'm not trading the gap. Okay, so this right here, we're already down a deviation. we're not fading the gap. We're not going to go in and buy, because again, if it opened lower, we'd expect it to go back up to settlement, but it's down one deviation, so therefore no trade. Okay, if it goes over here, goes up, then we got a deviation down. I also want to have a spike striker somewhere in the hour leading up to or hour of as a signal. So I like using the spike striker as a way to know when to enter the trade. Okay? So we got a spike striker here. We got 5, 10, 15. So there actually was a short. I don't have to wait on the market open to get in. Like, I can actually get in like 15, 20, 30 minutes before the market open. So I hop on my computer. It's 8 o'clock. There's a gap up. I get a spike striker short. I'm going to target an out of the money contract here down here 19. What is that? 63. And I mean, we're talking about a pretty nice little move. It's like we're at 1970 or so, 1971. So we're talking like 8 points in almost 3 strikes. You're probably gonna be able to get about $20 at least in the morning. Most of them fill by 11. I prefer to do 415s because then you have all day for it to move. But in reality, I found that about 80% of them fill before 11 o'clock. So maybe a little higher than that, actually. So it's up to you. I mean, you can get this for like $10 or whatever in the morning. It'd be really cheap. So that's the advantage of the morning one. It's just it has to move. And you'll get till 10, whereas you have to wait till 9 to get the 11s. Okay? Usually if they haven't filled by 11, usually they're not going to. And we can just literally follow this over and over again. There's a little gap right here. And we never really got a spike striker right there. So this is before the market opens. So you can target that. Okay? So you can also do it after the market opens. So if I get that spike striker after the market opens, then again, I prefer 415. It's just you may not always be able to get the pricing. And we have moved a deviation. And I get a spike striker, I'm going to go back to settlement. Okay? So right here, you get a little bitty one that's really small, so it probably wasn't enough to make any money on, but it happened. Let's see here. Okay, so here's one. That's about a strike. So for 10 a.m., you could have pulled it off, and notice how it did come back to settlement. I know this is probably a little hard to read. I'm sorry. There. That might be a little better. So there, that was one that didn't come back, but it was within literally 3 ticks. If you would have used my 43.57 rule, you would have taken profit. So you scroll on across. That's a big gap. Came up. That one did not work. It's an out of the money trade though, so it's not as painful. But I mean, you can get the idea. This one flew. It came up quite a bit. Did not touch the gap. Is about a point or two off. So 1970.25, 1971.5. You might have got your fill at 43. You probably would have been nervous enough because this thing took all day to get up here. Might have hopped out. But that's one way to do it. I'm not trying to give you a system. I haven't fully defined, just to be really transparent on it. I have a system. I haven't fully defined a way to duplicate that. I have analysis in my head. And I haven't fully defined the gap trading system to make it easy for somebody else to duplicate. This one's way up here, but we're not up in deviation. We did get a spike striker. That would have been nice. It came way down. And you don't have to choose. It may not even have to come down to the strike, because your strike may be right here. Right? It may not be down here. You may have a strike right here. You have a strike right here. So, obviously, I always want to have a strike. Like, if I'm selling to buy back, I want to have one at or above settlement. If I'm buying, to sell back, I want to have one, at or below. I want it to be closer to me, not further from me than the settlement price. But you can go through. Another way to look at the chart is to go over here, pull up, file, new chart. You can open up the S&P over here, and we can go into daily bars, change this to regular trading hours. This will just let you see the gaps. It won't really do anything beyond that. But it's a really easy way to see them and see how often they fill. Or don't, depending upon the market. Extended, regular. There we go. RTH. Open that chart up. Here we go. My demo computer. Get off of there. All right. And then so you can basically look at where the closes and the opens were and did it fill in or not. So, some of them do, some of them don't, some of them come close, and that's what a gap is. I mean, today was just a pop. I mean, I think this flew down. Now, this only shows you, like, open and close. You may have got in earlier and it may have filled, right? Like, this one opened up, it went up. This one opened, it went down, but not far enough. But what if you got in earlier and it did go down before it came back up? But it lets you see gaps. You can see the open and close gaps. And if they touched, then the gap filled. So that's one of the things that we're working on, trying to, again, automate that a little bit more for you. But I look at a lot. I'm looking at DOM, time and sell, spike tracker. I'm looking at volume spikes. I'm looking at increasing volume. I'm looking at diagnostic bars. I'm seeing how slow the bars are going when they're bouncing off a deviation level. I'm looking at a lot of stuff. So it's been a harder one to duplicate, but I'm working on it. Is there any way we can automate an apex entry? You can automate, like, if you enter the stop loss and take profit or none of the momentum scalps. I have the ATM strategy on that in the forum. If you just go over to System and Apex, I show you how to set up the ATM. We had the classic Apex strategy in there, which is already automated, but that's more for profit poppers. Okay, for the elite system, it's not automated yet. We're having to build a lot into it because here's the thing: when you go automated, people do. They're like, robot, okay, and they stop learning. And I know that's what happens. Everybody does it, okay, and not that everybody will, not that you will, but that's what everybody does. So what we are working on is we're rebuilding actually from the ground up. We're rebuilding everything, and what it's going to do is it's going to make it where we can code faster. The charts will load faster. We can convert to Ninja 8 in like a week when it comes out. We'll also be able to apply it to other platforms really easily. And as we're doing that, we're adding in all the abilities for various rules and to spit out output files. Like, that's what part of this project is, where I was showing you stats. Like, all I had to do was hit a button and I got all the stats on every trade. So all that is being developed. It's taken a heck of a lot longer than I hoped it would. But it's because what I'm trying to do is I'm trying to take all the style. So a lot of these 1, 2, 3s I teach you, like, at deviation levels, don't get in, Like, trail your stops. So stuff that you see in the elite room, where you learn a little bit more than just the ABCs. The ABCs work, but the 1, 2, 3s make it better. And so we're trying to just get the 1, 2, 3s built in. And it's just, I'm trying to make a real automated trading system that, you still manage with, prudence, but not just one to stick out the door. If I would have went out the door, I could have went out the door a year ago. But I want one that's good and solid and working. Because if I put it out there, I want it to be, good for everybody. And honestly, when it comes out, I'm telling you right now, the traders who use it are going to be at a severe disadvantage because they're going to be so used to just A, B, C, D being spit on the screen. They're not going to have any idea of why. They're not going to have the confidence. They're not going to understand anything that's going on. So there is a massive advantage to actually knowing how something works and learning how to read the markets. An MVP reversal, it may be setting up, but I mean, they can go down 3 deviations today, man. The market's ready to crash. It's needed to crash. It needs to let off some steam. But don't worry about if you don't get like that bottom little piece. It's okay. Like, it really is. I mean, that's a $1,200 trade. It's a $1,200 trade. Like, let's see. Steven got what, 106 ticks, so it's a $1,060 trade for where he got out. That's okay. That's a walk away day. Okay? The reason I don't like gap fills on straight up futures, Joseph, is the issue with you have to have a stop. You notice when I was talking about my gaps, I never talked about where I put my stop. And I've seen all the stats. I know the guys who know gaps backwards and forwards. Okay, their stats are not that impressive. um, it goes so far against them. You're already on the beach. You should be. I'm gonna be on the beach next week. I get to take a little vacation finally, so that'll be good. Take it off. But yeah, I mean, like right there, where was your stop? Like we went short on this, and it went up against you, and come back down. You can make just as much money, if not more, and not have a stop loss and have the same amount of risk. So that's why I don't like them. Now, if you are going to do them with futures, there is one exception I would give you. Okay, and that is the fact that you could use spreads to hedge it while trading it with the future. Okay. Yeah, the main earnings are over, man. But we're still in earnings season technically, but they're basically dead. So we just got to keep up with what's happening. But there's not earnings that move the market anymore, unless you're an option trader. Yeah, you ought to know better than anybody, Caleb. You're the one that updates that for me. Thank you. Okay. So I think I caught up on everybody's questions. I just wanted to get all those done. All right.